Welcome to Luminous Moments, where we learn to improve our financial literacy and empower ourselves through knowledge. Today, we're dissecting the book The World's Simplest Guide to the Stock Market, An Introduction to Companies, Stocks, and Making Money from Investing by Edward W. Ryan. We'll break down the key concepts and actionable steps you can take to start investing in the stock market confidently. Let's dive into the basics. The stock market is a platform where shares of companies are bought and sold. Think of it as a bustling marketplace where you can buy a piece of your favorite companies, like Apple or Amazon. Investing in the stock market can help grow your wealth over time, but it requires knowledge and strategy, as highlighted in the world's simplest guide to the stock market. So, what exactly is a stock? A stock represents ownership in a company. For instance, if you buy a share of Tesla, you own a tiny part of Tesla. There are two main types of stocks: common stocks, which give you voting rights but come with higher risk, and preferred stocks, which offer fixed dividends but usually don't allow you to vote. Investing in stocks can yield higher returns compared to savings accounts or bonds. Historically, the stock market has returned about 7 to 10% annually after inflation. For example, if you invested $10,000 in the stock market and it grows at an average rate of 7% per year, in 20 years, you'd have over $38,000. That's more than tripling your initial investment excluding the inflation. Now, let's talk about how to start investing. Here are some actionable steps. Educate yourself. Read books like The Intelligent Investor by Benjamin Graham or A Random Walk Down Wall Street by Burton Malkiel. These classics offer great insights into investing principles. Set financial goals. Determine what you want to achieve. Is it saving for retirement, a home, or your children's education? Create a budget. Decide how much you can invest. For example, the average salary for an ordinary US citizen is around $55,000 a year. If you can set aside just 10% for investing, that's about $5,500 annually, or roughly $458 a month. Choose a brokerage. Select an online brokerage. Some popular options include Robinhood, great for beginners with no commission fees. Fidelity offers comprehensive research tools and a user-friendly platform. Charles Schwab, known for excellent customer service and educational resources. Start small. Begin with a modest investment. If you set aside $100 a month, in a year, you'll have $1,200 to invest. This approach helps you get comfortable without risking too much. When analyzing stocks, consider fundamental analysis. Look at a company's financial health, earnings, revenue, and debt. For example, if you're interested in Microsoft, check their earnings reports and growth potential. Technical analysis. Study price movements and trading volumes. If you notice a consistent upward trend in a stock like Google, it might indicate strong investor interest. Valuation ratios. Use ratios like price to earnings, PE, to assess if a stock is undervalued or overvalued. Diversifying your portfolio is crucial. Don't put all your money into one stock. For instance, if you invest in tech, healthcare, and consumer goods, you reduce risk. Consider your asset allocation based on your risk tolerance. If you're more conservative, you might allocate 60% to bonds and 40% to stocks. Understanding your risk tolerance is vital. Use stop-loss orders to protect your investments, and always stay informed about market news. Adopt a long-term perspective. Focus on buying and holding stocks rather than making quick trades. Consider using dollar-cost averaging, where you invest a fixed amount regularly, reducing the impact of market volatility. Investing in the stock market is a journey that requires patience and learning. By following these principles, as outlined in the world's simplest guide to the stock market, you can build a solid foundation for your investment strategy and work towards financial independence. So, get started today. Remember, every little step counts. Thanks for listening to this summary of the world's simplest guide to the stock market. Don't forget to like, subscribe, and hit the notification bell for more financial insights.